All right, it's the next episode of Ask the Experts. You see I say next as this. I don't know when people have tuned in, when they're tuning in, what's happening. It's Ask the Experts, MoneyWatch's podcast, where we answer your financial questions. Take the mystery out of your financial life. We have a special guest star. Hold on a second. I'm going to try to do something for that just because something like that. Did we hear it? I didn't hear it in my headphones. Let me try it again. Oh, there it is. There it is. Okay, very good. All right. Lauren Young back in the house. All right, Lauren is the wealth management editor at Thomson Reuters, overseeing personal finance coverage for Reuters.com and other Thomson Reuters platforms. Previously, she worked at Businessweek and Smart Money. She's covered mutual fund and corporate bonds. She's basically done everything. Welcome, Lauren.
Thank you, Jill. That was quite an introduction. I want to know myself. I sound really
qualified. And whenever you want me to narrate your bio, your A&E bio, or where are they now? One of those two. Let me know.
Where are they now?
I like that. And we also have Jack Otter in the house. Jackson.
I'm always here. No special guest for me.
You know what? I want to see if I can find something for you special. But, I'm not.
Bronx cheer.
No. Something like this.
Oh, very now.
See that?
I'm happy. Yeah.
Isn't that good?
Great.
I like that.
Thanks, Jill.
You know what happens when I get these sound effects?
Yep.
Could be a long show. All right. Now, what are we doing today? What we're doing today is, let me start by doing this. So, Lauren, how often do you go to the doctor?
I'm good. I go to my primary physician for that annual physical, and honestly, unless I'm really sick and think that I need medication, I don't really go very often.
All right, but once a year, little check-in?
Yeah, but then don't forget the specialist, the dermatologist, the OBGYN, you got your little specialist.
Jack, how many pap smears a year do you get? Jack, how often do you go to the doctor that's not an orthopedic surgeon?
Yeah, I go weekly to the orthopedic surgeon. Otherwise,
Jack is falling apart. He's really falling apart before our eyes.
Yeah. Otherwise, probably once a year because something happens where I get sick. But for the checkups, unfortunately, I haven't been for 4 years.
Oh, my goodness gracious. We're going to have to
But my doctor's retiring, so I'm going to go quickly before he retires.
That's right. Go get somebody new.
Yeah.
Well, I always think about that because I think about, we really do it. I think women especially are a little bit more attuned to these annuals, and, we have to go get our mammos, women of a certain age, of course. No colonoscopy for you, Jack?
Well, I figure as long as this guy's
That's why he
done
doesn't
that,
go to his doctor.
I'll give him one more shot.
All right. So anyway, you got to go get these checkups because it's just like your money. This is what I always say. People need an annual physical for their money. So remember in the beginning of the year, we were telling people, this is what you have to do. It's New Year's resolutions, all this stuff. So I wrote an article for the website, which thankfully Jack edited because I need a good editor. It's kind of like being lit well and having a good makeup artist, having Jack in your life. And the article was basically say, okay, mid-year here, what are the 6 steps for protecting your money? So go onto our website here. Sally, who's womaning the board, by the way. Here we go. Look at this. Look at this gorgeous article. Financial security, 6 steps for protecting your money. We'll talk about the comments in a second. But anyway, we go through this because, what I found when I used to be an advisor is that you could kind of get people, after the first of the year. And then, if you don't catch them again before the summer, then you got to wait till the school year starts. So you want to catch them before that all starts. So we thought we'd write this article and get people to at least pay attention a little bit. And, the funniest things, we cover lots of different things, estate, investments, real estate. So, of course, the issue of life insurance comes up, right? And we have a question about that. And if you've got a question, send us an email, asktheexperts@moneywatch.com. asktheexperts@moneywatch.com, or hop onto my Twitter feed, Jill on Money. Got a couple of questions from there as well. So there is a violent argument going on in the comments section of this article about life insurance. Because not surprisingly, insurance agents that sell whole life and universal life insurance didn't like the fact that I said that you should buy term life insurance in most cases. Lauren, give me your life insurance spiel.
Jill?
Yes.
I agree with you.
I love you. That's why I invite you back.
Thank you.
It's like having a coffee clutch.
Right.
Fabulous. People get totally wrapped around the axle about this. It's just not that big a deal. It's a pretty easy equation. Most people need life insurance for a period of time, right? Who needs permanent insurance? Jack or Lauren, who do you think needs it?
A hedge fund manager or somebody at some fancy schmancy investment bank like Morgan Stanley who's making so much money that they're supremely confident that they will not have a cash flow problem for the rest of their life. And what they need to really worry about is succession planning, taxes, inheritance, estate, that sort of thing. And life insurance can play a role there if you're young enough to overcome all those upfront expenses that you get with a universal life policy. Mm-hmm. But that's a very small segment of the population.
Yeah, this guy who writes in, which cracked me up, says, I have to disagree with you on the life insurance step. Like, hello, why don't you just tell me which firm you work for? Because he goes through this whole thing about how premium permanent insurance is better. It's like, for whom? Who? Yes, for estate planning, totally get it. You need insurance for your entire life. How many estate tax returns were filed last year? I think 13,000. So what are we talking about here? Why are they fighting me on this, Lauren?
Well, and what we should tell to our viewers is the only people who make this argument are people who get paid a commission to make that argument. Mm-hmm. I mean, you do not find independent financial advisors jumping up and saying, oh, no, permanent life insurance is a great thing.
Yeah.
Right? I agree. And, I think that there's a lot of rules of thumb about life insurance, too, that I think kind of get baked into the formula, like 7 times your annual salary is one that I've heard.
Yep.
How do you feel about that, Jill? 7 times reasonable?
I say, go on a calculator. What is so hard about this? Because I don't think the salary thing works at all, because what if you have 5 kids? You know what I mean? Like, the salary thing just doesn't make sense to me. It's all about, how much debt do you have? Does your spouse work? And Jack and I we were trying to do an article for another publication, many moons ago, right? And they kept wanting a quick and easy formula. Just give me the rule of thumb. There actually isn't a real rule of thumb. So the calculator, I actually found this. Hey, Sally, bring this up here because this is kind of interesting. I found this website that I thought was kind of cool because it was it's a nonprofit organization, and it helps you kind of do a calculation of how much life insurance you need. And there's lots of ways to do this, but generally speaking, it takes into account how much you're making now, how much your spouse makes, how much you have in savings, how many kids you have, do you want to pay for education. But it's not that hard. It literally takes 12 minutes. So I say go do it, A lot of people don't need life insurance, by the way.
Well, that's another one that'll get howls of protest from the insurance crew. But
everybody
of course, you're
needs
right.
It.
You need it if you have a salary that somebody else relies on and would get cut off if you died.
Yeah. And a mortgage.
Yeah.
In that scenario, that helps a lot, too.
Absolutely.
And kids. And kids.
Exactly. It's interesting. I learned a lot about the whole life insurance industry. Someone came to me, and it was a woman who was about 39 years old. She literally calls me. She goes, hey, I got your name from a friend of mine. I'm dying of cancer. I have 6 months to live. You got to help me out with, planning for my family. So, we did a whole bunch of work, and we worked very closely with her insurance company. But it was so amazing when I looked into the insurance that she had, and I said, how did you come up with this number? And she said, I guessed. I just guessed. And now, so what ends up happening is going through that process showed me something that was very important. First of all, if you're the surviving spouse, sometimes you don't actually want to work full time right after your spouse dies, especially if it happens early in your life. Sometimes you actually may want to go part-time. You want to be with your kids. You want to kind of have things funded. And the last thing you want to worry about is money after your spouse dies. So I'm all for getting the right amount of insurance. I just don't think it has to be permanent, and I mostly think that every situation is different. Try to just run through the numbers.
I swear to you that my kid doesn't watch that much TV, but there's a commercial right now for children's life insurance.
Oh, no.
So he's really interested, and he's 5. And so now it's prompted a whole conversation of, do I have life insurance, and does Dad have life insurance? So he knows how much I'm worth, and I heard him talking in the shower with his father. Will I be rich if Mom dies?
I love that. Oh, my God.
Can you believe that? 5.
Most of us would be much, would certainly be probably a little bit wealthier if our poor spouse died at the wrong time, but much unhappier in general. All right, let's get to some questions here. So, let's start with investments, because that's the sex appeal one. That's how we get you to watch this, because we can talk about insurance, but we can promise you we'll talk about investments. Much sexier. So we have a couple of questions about investing from MoneyWatch users. And Danny posted this first one on our Facebook site, something which our producer Megan says anyone can do, with an exclamation point. You know, she's from Kansas City. She's very happy.
I don't like to contradict the producer, but I'm not sure my father can do it. Actually, not anyone can't do it. But
I agree with you.
Yeah.
I don't think my father literally calls me when I send him an email now. I'm like, Daddy, hit reply.
My mom has more than 1,000 friends on Facebook. Just
Wow.
saying.
Oh my
Okay, so-
God!
Just saying.
we know who the
Lauren's
hip one
mom.
here is. Yeah.
Totally. All right, here
She
we go.
sells insurance, by the way. Life insurance.
She's a life insurance agent.
Yes.
The whole life is her specialty. Okay. Here comes Danny, says, as a recent military retiree with savings piled up in the government-sponsored Thrift Savings Plan, also known as the TSP, what are my best options for managing the account? I've been told to roll it over into a Roth, a traditional. I haven't been able to garner any expertise as to the tax implications. Can you offer? Jack's like panicking right now.
I'm not.
I know.
I'm ready.
Lauren is so over
No,
this.
I'm,
Are you excited
I'm worried
about
that he's
it?
going to do the wrong thing.
I'm worried he's going to roll it over with an insurance agent into an annuity. But okay, let's go. Lauren, rock on with this, sister.
USAA.
Yeah.
You are, as a member of the military, you are eligible to use USAA, which is a financial services firm. My dad was an officer, so full disclosure, I'm a USAA member. I think they tend to do a great job of offering products and services to their members, and it's geared to people who, chances are he's pretty young. If he's retiring from the military, they tend to be pretty young. But they have, really good mutual funds, low cost, and they have great financial planning services. And I just think it's a really smart team of people down there. So it's in San Antonio, Texas, and I am not paid to endorse USAA, but I am a believer in what they do. And I think you need help. You have a lot of questions, and I can't answer them all for you, and you need to talk to somebody, is what I'm saying. So get some help.
And if USAA would like to sponsor the podcast, I'd be happy to talk to you. Jack?
Here's what worries me is the Roth question. It's possible that a Roth could be a great idea for this guy, but he needs to know that he's going to owe a whole lot of tax if he should roll over what essentially is a 401k into a Roth. He'll
Do you
be
want to
liable
explain
for,
just give a little
Sure,
Roth
sure.
disclaimer what it is?
Sure. A Roth is a wonderful thing. You invest after-tax money into it, and you never pay any more taxes no matter how much it grows. So if you're a young person, you can put after-tax money in this thing, and 40 years from now, withdraw it and pay zilch, whereas all the rest of us with 401ks and traditional IRAs, we're going to have to pay tax as if it's ordinary income. So they're wonderful. I'm a big supporter of it, but I don't want this guy to do it and then suddenly get walloped with a big tax bill.
I've been talking to a lot of people lately who are doing partial Roth conversions. So this is a good time to do a Roth conversion because you have 2 years to pay back the taxes. You don't have to pay them all in one lump sum. And the whole rule of thumb about should you convert and do the after-tax money, there's a whole lots of thought around that. But you have to have that money to pay the taxes.
Exactly.
And so, you got to have, depending on the size of your
And
account.
you can't take the money out of the Roth. You can't take the money out of the...
You shouldn't, because that would kind of defeat the purpose. So you need to have after-tax money to pay those taxes.
And I also may remind you that the thrift savings plan does not actually make you move your money. So if you wanted to and you didn't want to go to USAA and you just wanted to leave your money there, you can do that as well.
And they're good, and it's a good plan.
It is
the investment options are great.
Yes, that's what I was going to get to. So here I am on the government's website, and that would be tsp.gov. And they have something called the Government Securities Investment Fund, the G Fund, which, by the way, pays a nice chunk of interest and always has. They have a fixed income fund, a stock fund, a small cap fund, and an international fund. They used to only have 3 funds, by the way. But they also have life cycle funds, and if you don't actually want to manage your money actively and you want someone else to do it, it's a very affordable plan. They're decent funds, so don't feel like you have to do it. And if you meet an insurance agent who asks you to roll this over into something called a variable annuity, I beg of you, Danny. Danny, I'm begging you, don't do this, please. Okay, that's pretty good.
Yeah.
All right, Jimmy in Pennsylvania has this question about investments. Will investors be able to lessen the amount of money we pay in fees to mutual funds? Do you realize, says Jimmy, with more money, say $1 million, those with more money, with $1 million or more, pay less to invest than those with smaller assets. I don't think this is fair. Do you, Lauren?
So I don't know if you'll be able to find it on the Reuters homepage, Jill, but we just did a story because there's a big ruling right now about 401k fee disclosure. So in retirement plans, one thing, it's pretty easy to go onto a website and find out what the expense ratio is for a mutual fund, but it's really hard in your retirement plan to find out what you're actually paying in fees. And I don't think that it's fair, Jimmy. And the reason why institutional investors, people with a lot of money get the break is because this thing called economies of scale, right? But there are plenty of low-cost funds out there, and it's just a question of knowing what they are. And that's why in your own retirement account, where probably the bulk of your money is invested, being able to get a grasp on those fees is going to be a lot easier because of new regulations from the Department of Labor.
And I do have that, by the way, if you want to check it out on Reuters.com. Yep. Saving for retirement, watch 401k fees. This is a nice article that you guys have. I also like this. I think it has a nice layout at your website. I'm very pleased to look at it. It's lovely.
I'm going to take that back to my people.
Please do. Jack, don't tell Eric I said that. Oh, wait, Eric, you watch him?
Uh-oh.
Okay. Anyway, this is always something that has sort of been the conundrum of the industry, how to provide services to everybody. And the bottom line is that rich people definitely get off cheaper in all of this. That's why there are things called break points, and it's really hard to manage that. But as Lauren said, go to an index fund, and then there isn't any issue around it. Your fees are generally lower.
Yeah, and I think that there are plenty of the larger fund companies out there. They have some pretty good. They're very sensitive. I mean, I mentioned USAA before, who has some pretty cheap actively managed funds. T. Rowe Price has some good actively managed funds. I mean, there's
Vanguard,
there are
Fidelity,
Vanguard, Fidelity. There are so many
Schwab-y.
choices out there.
Sure. At some of those Vanguard and Fidelity funds, it's 8 basis points for everybody.
Isn't that awesome?
That's a good party.
And the Vanguard, they're known for indexing, but their actively managed funds are really cheap.
Okay, did anyone hear that sneeze? That was Megan. If anyone's wondering who Megan is, there she is. Fantastic.
Bless you, Megan.
I know. She's so good. Okay. Let's go into real estate. This is most homeowners would say that their largest asset is their home. So it makes sense to clearly include this when we're talking about the big picture annual checkup or semi-annual checkup. Jag has a question about refinancing. He writes, what portion of the refinancing costs can I deduct from my taxes next year? Can I deduct only a certain amount every year? Who knows the answer to that? Lauren? Jill?
I know a little bit about it, but
okay.
You know more.
There's, I don't really know it off the top of my head. I have to be honest with you, and I should have probably looked at it. Sorry, Megan, but it is. Look at Jack. Jack's like, give it to me, baby.
No. I'm just saying. I think I know. I think I'm
Go,
covered here.
rock
I think
on.
the answer is that you have to amortize it over the life of your mortgage, and if you refi next year, then you can deduct all those points next year. But if you stretch it out for the rest of the term of the mortgage, then it's going to be over 29 years.
Okay,
I think why people are confused is because of the way the tax credits were for the past few years, and it was like, what year could you claim the credit? It changed, and so I think that's why it's a little murky.
I think the other thing is when you roll the costs into the loan, which is what most people do. They don't want to write a check for the closing costs. Then you do have to amortize it over the course of the loan. But if you pay your fees separately and write a check at closing, you can deduct it in the next year. So just want to say, portion of which. Okay, we're moving on because none of us feel comfortable about really answering that. Damn it, where's that CPA?
I'm curious, have either of you refinanced because rates are so low?
I have
two. Okay.
Oh, wait, Jack,
two?
by the way, I'm doing both of them again.
Really?
Yeah.
Wow.
I'm in the middle of refining. I also want to say the appraisers of the world, I am totally like that, okay? There's no way my apartment appraised at the number you gave me, madam.
Because you think it's more or less.
I know it's more. It's ridiculous. It's like I can't find an apartment in my building. They compared it to another building 3 blocks away, Lincoln Towers, which is so not like my building. Anyway, it doesn't matter for me, but it's like it just shows you appraisers are lowballing everything because they're so freaked out.
I got to say, I hope that's true because we got an incredible appraisal. And I started to worry. I'm pushing the limit of the tax deduction soon. I'm going to have to start scraping to find out all those assessments I paid, all that paint we bought.
There you go.
Because they gave us an incredible.
Oh, maybe you know what? Things in Brooklyn are looking up, Lauren.
Well,
appraisal, yeah.
and obviously probably a lot of the people who are listening and watching right now may not be living in Brooklyn. So
That's
for
it.
you, should you refinance?
I
Guess is the
I
question.
refinanced because after I ran the numbers on my apartment, it would take me 13 months to recoup the closing costs. It was really cheap to refi, and I was surprised. So I also got a co-op loan for 4.325%, 30-year fixed rate.
Wow.
So that's insane.
Play those applause again.
Hold, please. Let me just do
Yeah.
let me do this one. Oh, Roland, where I thought he put this in. Maybe it's not. Oh, all
It was
right.
so pretty. You know what? We can just do it.
Yeah.
Yeah, that was good.
Megan, do what you have to applaud Sally.
Very good. That's good. This is what I get for my efforts.
So
okay,
just on the refinancing thing too,
Go.
one of my colleagues just wrote a story, and because everybody in the office, I swear, a lot of personal finance journalism comes from what your editors ask you, and 2 of our editors are buying real estate right now. But she says if you plan to move in 3 years or less, don't bother refinancing a variable loan.
right.
Okay, so so there's fixed, that's one thing, but variable. Maybe
And that's
not.
the untold sweet story that a few people have got right now, where they had variable loans that are based on LIBOR,
And
and
they've
they're
gone
paying
down.
1 or 2%.
Yeah, it's amazing.
Robin, my old roommate, that's what happened to her.
Somebody in
And-
our building, too.
And so, I mean, it can work, but you've got to run the numbers. If you're going to stay in there for a period of time, it's very easy. And make sure you're comparing apples to apples. And
I'm curious, Joe, when you say run the numbers, do you use the calculator on your site? Which calculator?
okay, here we go.
Yes, you do.
Of course I do. Let me just tell you that I use a very old-fashioned HP 12C, which is a dinosaur now. I just looked at, how much is the new loan going to cost me per month? How much is my old loan going to cost me? What are all the costs of refinancing? How many months will it take me to recoup those losses, the lost money that we spend on the refi? And am I going to stay in this place longer than that period of time? And if the answer is yes, then yeah, great. So after, I took every possible closing cost because they surprise you sometimes at the end. Oh, there's a little extra here. Oh, we didn't really, that appraisal, you paid for that yourself. We didn't include that in the closing cost. So I pile everything in.
And just, not to be the devil's advocate, but I'm just going to be.
Do it.
Credit scores right now, more than half of Americans have what's considered half of Americans have a subprime credit score now. So, even if you want to get a taste of those low rates, you might not be able to.
Yeah, well, that's true. It really is.
You've got to
only
be
for
in good.
people-
You've got to be like Jack and Jill.
Yeah, you know what? That's it. Right here.
Yeah.
Yeah.
Okay.
fist bump there.
You have to have good credit. You've got to have plenty of equity in your home. You've got to be able to withstand an appraisal that's going to probably be less than it was 3 years ago. Just all of those
You got to
things
have a
factored in.
job, Jill.
Oh, the job thing.
It's true.
By the way, Danny just sends an email to us. Do investments in overseas real estate make any sense now, especially in countries like China and India?
And
Also-
Brazil. Brazil's real estate market is exploding right now.
So here's what I would say about that, though. Danny, please be careful. I mean, frankly, if the Chinese market is going crazy or the Brazilian market's going crazy, is this really the time for you to jump in?
Well, so one of the things I think we're going to talk about, too, is things you should be doing in your portfolio in terms of diversification. And there's a money manager named Sam Lieber. He runs a firm called Alpine Funds. He's an incredible real estate investor. He's really bullish on Brazil right now because the real estate market is exploding. And I'm not saying that I would put all of my money into a Brazil diversified international real estate fund, not just a Brazil fund, but a a little something would be a good diversification. I
think that any resource-rich countries are ruling right now. So that's like Brazil and like Canada and like Australia and New Zealand. Those are the countries that are really seeing tremendous growth domestically. And they're great places to be. I would be very careful. I mean, I don't even know if you can buy Chinese real estate, but I agree that you should have an exposure to emerging and international markets. You don't have to go crazy either.
Pretty much any China fund has a China mutual fund has a decent real estate stake
Right.
because those companies have been around for a while
Yep.
and are a lot easier for institutional investors to buy.
So I think the point is, unless you've got a whole lot of money and a whole lot of time and cojones, if we can say that.
Oh, see.
I would stick to Sam Lieber's Alpine
Yeah,
Fund
yeah,
rather
absolutely.
than trying to go and buy your own real estate and deal with the legal implications and everything else.
No
You
kidding.
would not want to do that.
But we would be happy to join you on the trip to suss out your potential
I'd like to go to
property.
Brazil.
Me too.
Yeah, I want to go for the Olympics.
Can you cue the girl from Ipanema?
Beach volleyball? Yeah.
Beach volleyball, yes, I would like that very much. Okay, let's bring this whole thing full circle with a question from Tracy in Oklahoma. Writes, my husband and I just had a baby. Actually, Tracy, you had it. And I know we should have life insurance. Where is the best place to buy it? Do we need a lot of comparison shopping before buying? So earlier I put this website up called lifehappens.org, so you might want to check that out for Tracy. And what about where to buy it? What's your suggestion, Lauren, on that?
So I just actually sat through a webinar yesterday, and Stacey Bradford, who's one of your CBS MoneyWatch writers, was one of the speakers, and it was about managing family finances. It was organized by MetLife, and I thought it was really good. They gave a really good snapshot of what, it was all different kinds of things you could spend money on, and there was part of the talk was about life insurance, and I thought it was really informative. So I think I can get you guys the link for that, but it's going to be live, I believe, today. But they did a really nice job. I'm not, I don't know.
First you're shilling for USAA.
Well,
now
I'm not paid by MetLife either. I just thought they did a really good job of getting at for new parents a family. Do you know the average new parent spends between $11,000, I believe, and $13,000 on an infant in the first year?
Oh my God!
That's what it costs. An infant costs approximately $11,000 to $13,000.
Good Lord!
In the first year.
Well, you still need your insurance. I would say that, if you can go online to SBLI, Savings Bank Life Insurance, that'll give you a pretty good quick quote, and run through one of these calculators, see how much you need. Let's say you need $500,000 of term life insurance, 20-year term. Just go and start poking around. And
I agree, and I also think you should always, if you work for a company of any decent size, look at the employer plan, because they tend to get really good, because it's a group policy.
Right.
Great rates.
Very good.
So I would not... you can, is it enough? I don't know. But it's a good place to start in terms of overall coverage.
Luckily, they didn't look into the whole orthopedic thing. So, So since I'm in good shape, don't smoke, blah, 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 I actually got much better rates, it turned out, than the company did. I was going to sign up for the company. Like, no.
Yeah, and I said my mom's insurance agent, and when I told her what my company rates were, she said, I can't really do any better than that.
Oh,
so
my God.
Plan.
Now, see, Lauren, we should have totally... I don't know. We should have gotten your mom on the show.
You would love my mom. She's
Maybe
like
next
the
time
older
we'll
version of me.
I love you,
How can
so
we
I
not
would
love
love your
her?
mom.
She's
exactly.
hysterical.
Come on.
All right, she's gonna email you tomorrow.
All right, let's go. We'll have her. I'd like to have both of you on. We put my mother on a segment, and she drove us crazy on site. Luckily, she's not watching this, so she did. Why is this taking so long? It's only a few seconds. So, yeah, but your mother will be good.
Showbiz.
She's she's like the queen of one-liners.
Fantastic.
One of my favorites is that person's a few fries short of a Happy Meal.
Oh, I like that. Yeah. That's very good. All right, so this is good. This is a good way to actually end the show talking about crazy people and how
and Happy Meals.
Exactly. So, Lauren, thank you so much for joining us. And just, in all this fancy bio that I gave you, do you blog? Is there some place that people can read you?
I do. I think when we showed the story earlier, there's a blog on Reuters.com called Deep Pocket.
And
which I'm it's a soft launch. I'm getting that going. And we're going to have a personal finance page and more personal finance coverage on Reuters.com in the coming weeks. So stay tuned.
So stay tuned. Check out Lauren Young, and she is that wealth management editor.
You can just
at
call me
Thomson
personal
Reuters.
finance. I'm changing my title to
You are?
I want to just be personal finance.
Do you know why?
editor.
Because I want to tell you why they do that. Do you know why? I know this because I'm a salesperson.
Yes.
Wealth management is a hired demo. They're
Absolutely.
personal finance,
Right.
and they want those advertisers.
Well, I want those cards like they have, where it's Japanese on one side and English on the other. I'm just going to have two different sets of cards and pull them out depending on the audience.
My dad was a trader on Wall Street for many years. He was on the floor of the American Stock Exchange, and he would say he would always say, "I don't have a business card." Never had a business card his whole life. So when he retired, his friend printed up a business card. It says Albert Schlesinger, and he gave his phone number, and then he put his handicap, which I thought was quite good. So that was about it. All right, that's the end of Ask the Experts. If you've got questions for us, you're thinking about things during the week, shoot us an email, asktheexperts@moneywatch.com, or send it to our Facebook page, or what else? Jill on Money on Twitter. And Lauren, thanks so much. It was so great having you, as always.
My
and
pleasure.
Jack Otter?
Great to be here. And we should finally say @Lauren Young on Twitter.
Oh,
a
yeah.
very popular tweeter, that Lauren Young.
I'm a tweeter. I'm an
is that
uber
right?
tweeter.
Oh my God, I gotta just go follow you right now.
I
don't
think
know.
I follow you, Jill. I'm pretty sure I do.
I'm
She's got
so
more
lucky.
followers than you and me combined, Jill. So
You
maybe
know
we shouldn't
what?
be telling
This
people
is
about
so
her.
sad. I'm going to go find her right now. Okay, I will find her after we go. Thank you so much for watching. We'll hang out with you again next week. Lauren Young, she is the queen. Jack, you are the king.
Well, thank you, Jill.
Thanks so much.